Hello everyone, welcome to my channel. This is Easy Accounting channel. Today we are talking about charity, the basic GST guidelines for charity. So charity means a registered charity or a registered Canadian amateur athletic association for income tax purposes, but does not include a public institution. So a charity can issue official donation receipts for income tax purposes. Further information on how GST applies to charity is available on Guideline RC 4082. Exempt supplies are supplies of property and the services that are not subject to GST or HST. So HST or GST registrants cannot claim input tax credit ITC to recover the GST paid on or payable on expenses related to making such supply. However, a charity may be eligible to claim a public service body rebate for such expenses. Registrant means a person who is registered or has to be registered for GST purposes. And then selected public service body means a school authority, a university, a public college that is established and operated other than for a profit, an hospital or a municipality. Supply means the provision of property or a service in a way including sale, transfer, barter, exchange, license, rental, lease, gift, and disposition. Taxable supplies are supplies of property and services that are made in the course of a commercial activity and are subject to the GST, including the zero-rated supply. Do GST have special GST rule? Do charity have special GST HST rules? Some GST and HST rules that apply to charity are different from those for businesses. For example, most supply made by charity are exempt, while most supplies made by businesses are taxable. So many charity are not required to register for GST or HST purpose, while most businesses are required to register for GST purpose. So if a charity is registered for GST purposes, it generally must calculate its net tax by using the net tax calculation for charity. When is a charity required to register for GST or HST purpose? A charity is required to register for GST or HST purpose if it makes taxable supplies in Canada and is not a small supplier. When is a small supplier? When a charity is a small supplier, so a charity qualifies a small supplier under two tests. Number one test is you must have gross income of 250 gross income test. And number two test is you must have 50,000 taxable supply test. So the charity is a charity issue a new business number when it's registered for GST. So when an organization registered with CRA, it is issued a 9 business number to identify the organization with CRA. So let's explain the small supplier division. So if a charity has branches or division, it may apply to each branch or division with 50,000 or less taxable supply as a small supplier division. And each branch or division has to be a separate identified by either location or the nature of the activity that they are perform. So can a charity cancel its GST or HST registration? If a charity is registered for GST and HST purposes and determined after applying the small supply test that it does not have to be registered, it can ask CRA to have its registration cancelled by submitting a form RC145. So a charity can only cancel its registration if it has been registered for at least 1 year. So does a charity collect GST on the property and services that it provides? Generally speaking, a charity that is registrant must collect and account for the GST on its taxable supply, and a charity that is not a registrant does not have to collect GST on its taxable supply. However, special rules apply to taxable sales of real property and Dexnina municipality property. So how does a charity that is not a registrant recover the GST or HST paid or payable on its purchases and expenses? There is a PSB, like I said, is the public service rebate that allows certain public service body, including charity, to recover a percentage of the GST that they pay on their eligible purchases and expenses. So most expenses and purchases are eligible for the PSB rebates. So how does a charity that is not a registrant recover the GST and HST paid or payable on its purchases expenses? So charity that is not a registrant is limited in the ITC, that is the input tax credit, that it can claim because of the net tax calculation for the charity that it must use to complete its GST. So generally, a charity that is a registrant can claim ITC only on certain items such as GST paid or payable on purchases. So a charity that is registrant is entitled to claim a PSB rebate for the GST paid or payable on eligible purchases and expenses for which it cannot claim its ITC. So how does the charity claim this PSB rebates? A charity is entitled to claim a PSB rebate of 50% of the GST or the federal part of the HST paid or payable on eligible purchases and expenses. So a charity that is resident in participating province and is not a selected public service body may be entitled to claim PSB rebate for the province part of the HST paid or payable. So for Ontario is 82%, for BC, British Columbia is 57%, Nova Scotia is 50%, New Brunswick is 50%, Newfoundland and Labrador is 50%, and Prince Edward Island is 33%. So it's a charity entitled to claim other rebates. So charity may be entitled to claim other GST and HST rebate. So these rebates sum up to 100% and have different eligible requirements, and not all charity may qualify for these rebates. For example, rebates may be available for GST paid on printed books, purchases and expenses related to providing qualifying rents due to income housing, property and services exported from Canada, and goods removed from the participating provinces. So how does a charity complete the GST and HST return? So a charity that is a registrant is required to complete and file a GST return for each of its reporting period by using the form GST 34-2, goods and service tax, amortization sales tax, return for registrant. We have talked about that. You can check my video for more information about GST return. Thank you for coming to my channel. I hope to see you in my next video. Please subscribe to my channel and share my video. Thank you. Bye.